The stock had a pretty good run, but now it's starting to soften a little bit. In fact, it dropped 50 cents today back to 72. Well, we're slightly short delta at 87. If we wanted to be a little bit closer to delta neutral, we could sell 100 shares of stock, which we purchased at 71.51. It doesn't give us a very good profit. So the last 200 shares that we purchased was at 72.51. We could sell those shares and make a $100 profit because the current price is 72.01. And if we sold it at 72.51, that gives us a 50-cent profit or a $100 profit on 200 shares. But we decide to wait to see if we can sell more stock as the stock continues to drop. It's not necessary. We could take the $100 profit if we want, but we're going to wait and see what happens. The stock drops to $71.80. We're now short 122 deltas. Well, once we're short or long 100 deltas, that's when I like to pick up or sell more stock. So at 100 minus 122 deltas, I will sell 100 shares of the stock that I purchased at 72.51 for a profit of almost $100. So I'm only going to sell 100 of those shares. That brings us back to a relatively neutral delta position. So you can see that just fluctuating the price up and down by less than $1, $1.50 in either direction, or $2 at the most, we've been able to generate almost $1,000 in profit on this position in a relatively short period of time. At least I hope it's a relatively short period of time. That's why you really need the stock to move. Now let's take a look at a 15-minute chart of the Russell 2000 index, the one that I've just been demonstrating for you. As you can see, prices hit a low back here. This was last Friday, approximately 1 week ago, of $68.08. As the stock continued to move up, you would be selling stock because your deltas would be getting longer and longer. At $69.43, you're $1.50 from where you were, you would have sold stock. It would have then declined back to $68.50, at which you would have sold that stock in order to become delta neutral. Once again, the stock rallied and you purchased more stock when it got up to $69.46 because you were, at that point, you were selling stock because you were long deltas. For a while, the stock just traded sideways and then started moving up rapidly. Well, since you were only a little bit long delta, you only sold about 100, maybe 200 shares at this point. Once it got up to this point, you'd be quite long delta. You'd have to sell at least another 200 or 300 shares. Now you are short approximately 400 shares. At this point, it traded sideways for quite a while until it had a very large run up here. At this point, you probably would have been extremely long delta, probably 600 delta long, and you would have had to sell 600 shares. Now you are short 1,000 shares of stock at 72. If you are short 1,000 shares of stock at 72, what happens to your straddle position? Well, your straddle position is also probably at a negative position, or at a relatively long delta. At this point, stocks drop off dramatically down to 71. You could, at this point, sell some of your shares, the 600 that you went short here, for a profit of approximately $1.50. Stock rallied up again, and you sold some additional shares short in order to become delta neutral. At 71.92, you're close to 1,000 shares short of the stock. Then the stock continued drop dramatically, period after period after period after period after period. And during this downturn, as soon as you became delta negative, you were selling 100, 200, 300, 400, 500, all the way down to the point at which you were delta neutral again at $70. Being short 1,000 shares of stock all the way up, slower at first, maybe 200 or 300 shares until you got to this point, and then about 600 or 700 shares at this point, you would have gotten a full 2 points on those 700 shares short for approximately a $1,400 profit. That's how, and this is a relatively short period of time, this is only 2 days. That's how you generate profits gamma scalping. And that's what we're going to be doing over the next 20 sessions, is determining when, where, how, and why we're going to be buying and selling stock in order to remain delta neutral. All the time that we're buying and selling stock, our straddle position, and remember this is the reason that this works, is because we have purchased 10 contracts of this straddle on the IWM. Each contract represents 100 shares of stock. Once we get to 1,000 shares, we're going to be 1,000 long delta or 1,000 short delta. In either case, once we get to 1,000 short delta or 1,000 long delta, and we have either 1,000 shares short or 1,000 shares long, we can no longer move. We cannot purchase nor can we buy any more stock, and we have an absolutely flat delta neutral position, which can neither make money nor lose money. Our goal, of course, is to continue to trade the IWM on all the fluctuations that's possible, buying and selling stocks so that we are continually delta neutral. The more times we can trade, the more money we can make. And it's that simple. This is absolutely a brilliant way to day trade without the risk. As we go through the videos, this will be a live trade. We will be doing these trades live out of my account, and you can see exactly what the results are and how to do these yourself and the reasons behind them as we go through the next 20 sessions. So I wish you guys all the best and trade with confidence.